could the oils finally be ready to rebound here? The price of crude has fallen by about 10% over the past month. But as we pointed out last night's Off the Charts, oil's been bouncing back and forth between the mid-40s, mid-50s for months. Typically, the pullbacks have all been buying opportunities. But what does it mean for the oil companies themselves? Take Noble Energy, NBL, the independent exploration production company that spent the last couple of years aggressively expanding into some of the best acreage available in the U.S., the ultra-low-cost Delaware Basin region of the Permian down in Texas. Even though this company reported a better-than-expected quarter last week, even though its Israeli assets are finally starting to pay off, even though the company's selling all of its upstream Marcellus natural gas holdings for a great price, $1.2 billion, to fund the shift toward oil, the darn stock's only just a couple bucks above its 52-week low. Hey, could this be a fabulous buying opportunity? Let's dig deeper with Dave Stover, the chairman and CEO of Noble Energy, find out more about the quarter and his company's prospects. Mr. Stover, welcome to Mad Money. Thank you so much for coming on. Thank you.
Pleasure to be here.
Have a seat. You know, there's so much to talk about, but one slide stands out of all the different things you're doing. It's the U.S. drilling efficiencies, how well you have done even since 2015, which is an amazing story for Noble.
Oh, yeah. I mean, we've shown 50% improvement over that period of time, and it's not in just one basin. It's in multiple basins.
So that means, basically, even though oil's at 47, Noble can do well.
We can. We're positioned, and we positioned our business to do well. And, you know, what we've targeted is a $50 to $60 world, but we've got flexibility around that.
Now, you also have what is probably the most exciting, I think, field on Earth. I want to know how big the Leviathan field is in the East Mediterranean off of the Israeli coast.
Well, it's a world-class asset, Jim, and it's exciting probably beyond words. I think it's 22 TCF right now, but you think about it. You know, the first phase of Leviathan is going to be 4 wells. Okay. Each of those wells can produce 300 to 400 million cubic feet a day and will produce 2.5 TCF over their lifetime.
Or so just compare that to a well that would be, say, in western Pennsylvania.
Well, western Pennsylvania, it would take probably to get that same amount of production as those 4 wells, 4,000 to 14,000 wells. When you look at companies. I mean, this is, if you just look at some companies there, that's how it matches up.
The market's big enough.
The market's big enough. The market's expanding. Okay. That's why we're so excited about it.
And how is that? Because I know Israel's got a lot of coal base, so they need natural gas. Some of these other countries willing to take natural gas from that basin, even though it's affiliated with Israel.
Yeah, the market, when you look at that whole regional market, you know, we see it probably short gas about 4 BCF a day now. Wow. And could grow to 9 BCF a day over the next 10 years.
Geez, that's fantastic. Yeah. Now, and that's going to just be, you just got expedited approval to do more, so this is not, this is going to be ongoing.
It's ongoing. I mean, the way we see it, we've got now with the first phase of Leviathan, we'll double our capacity over there from a BCF a day currently to 2 BCF a day by the end of this decade. And then there's line of sight to doubling that again over the next decade.
I don't even know if your company's getting credit for that.
I don't think we have yet.
Honestly. Now, let's talk about Clayton Williams. You got that. I think you bought it at the right time. You got much lower than a lot of other companies, but it looks like it's better acreage. That deal's coming through, right?
It is. I mean, the deal's closed.
Right, but I'm saying that you're getting the results that you expected, maybe even more, it seems like.
I mean, just coming out of the box here, they brought on a well in what we call the C interval. And that interval is something we hadn't even valued hardly at all.
Explain that, and, you know, because our viewers are thinking this is a great bargain, but they won't know what a C interval is.
This is an interval that, you know, most of what we put value on was in the Wolfcamp A.
Right.
So in this C interval, it's already producing over 1,000 barrels of oil equivalent per day, over 1,000 barrels of oil itself. Okay. And so this bodes well for additional value that we hadn't even counted on.
And so you sell the Marcellus, you take that money without taking down more debt, and you can drill even more. And these wells are making money at these prices.
They are. They are. It's strong economics. We're actually going to expand the activity set out in the Delaware Basin. We'll end up the year with probably 6 rigs running. We'll bring 2 new rigs into the Clayton Williams acreage, and so we'll be hitting on all cylinders.
And will you be a guy who sells futures above 50 in order to be able to bring in more cash?
We look at hedging as kind of protecting cash on a certain percentage. We don't do over 50%. So we'll look for opportune times to protect our cash flow in the future.
Now, what is the new regime President Trump meant to Noble? Or is it this is private land and you do what you did under either president?
Yeah, well, we don't have a lot of federal land. Let's start with that. Most of ours is private land. But I think anything that's pro-energy is good for the business, and it's actually good for the country.
Is there enough pipe Because I know that a lot of the companies, like I follow Apache really closely. I don't know if Alpine High really comes in. There may not be enough pipe. I mean, you need more pipelines, don't you?
We do, and there's more coming in. I mean, when you look at the number of lines that are either already approved out in the Permian Basin or in process of getting approval, I think we'll be in good shape for what we need. And we're in a prime area of the basin with a high oil cut, so I think we're in very good shape.
Okay. And, you know, I wanted to ask you, we seem to have some price volatility. You know, when we get up to the 50s, it does seem like we're capped. Is that because other people are hedging? I mean, why does it work like that?
Well, I think, you know, I've been in this business now close to 40 years, and we've seen volatility and different cycles all over the period, and we're just going to have to live with some of that. So we've got a plan, and like I said, we plan for that $50 to $60 world, and we can thrive in that world.
Okay, and I just want to ask you, President Trump has changed some of the dynamic of the Middle East. Has the relations been with Israel changed, say, Turkey or Jordan or Egypt, making it easier to make deals?
Well, I think the relationships with the countries over there are changing, and a big part of the change is now having natural gas that's part of the discussion.
Right.
I mean, you look at the ability now with Leviathan to export gas to Jordan, the opportunity in Egypt, the discussions that are going on with other countries like Turkey and even into the EU. I mean, it's pretty amazing when you step back and look at what energy can do to change discussions.
Boy, that'd be something if Gazprom ever got to be disintermediated by you guys. This is an amazing story. That's Dave Stover, Chairman and CEO of Noble Energy. If you believe that oil is going to stay here even or go up a little bit, NBL, I think you should take a look at it. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.